In the high-stakes world of airline stocks, turbulence is often just part of the ride. But for JetBlue Airways, NASDAQ, JBLU, the current market climate feels more like a headwind than a detour. As investors keep their seat belts fastened, the airline's latest financial report reveals a mix of mounting challenges, declining demand, and an uncertain flight path forward, all weighing heavily on its stock performance. JetBlue stock took a hit in early trading, sliding by 2% shortly after releasing its first quarter 2025 earnings report. While the loss of $208 million, or 59 cents per share, was slightly better than analysts expected, they anticipated a 63 cents loss. The news did little to ease investor worries. Instead, the bigger concern came from the withdrawal of its full-year guidance, a strong signal that JetBlue's leadership is flying through murky skies without clear visibility. According to CEO Joanna Geraghty, macroeconomic uncertainty, heavily influenced by the ripple effects of global trade tensions, has forced JetBlue to step back from making any concrete predictions. The airline isn't alone in this move. Industry peers like American Airlines, AAL, Delta, DAL, and Southwest, LOV, have also been dialing back expectations, highlighting a sector-wide struggle. One of the most concerning signs for investors is the clear decline in consumer travel demand. JetBlue's president, Marty St. George, noted that while bookings in January appeared strong, they deteriorated into February and worsened into March. This drop-off has been most pronounced in off-peak travel, and the airline expects this softened demand to persist into the second quarter. With the booking window highly sensitive to economic swings and consumer confidence, JetBlue finds itself particularly vulnerable. To counteract these pressures, the company is eyeing multiple internal adjustments. It has already made capacity reductions entering the first quarter and is now considering further cuts, cost-saving measures, and even changes to its fleet retirement schedule to help curb losses and rebuild profitability. These efforts signal a strategy of controlled retreat, reduce exposure while waiting for more favorable conditions. Despite the gloomy earnings and guidance pullback, JBLU stock showed a small flicker of resilience later in the trading day. It closed at $4.38, slightly up from the previous session, though it slipped again to $4.37 after hours. That may not be a major rebound, but it shows that some investors are still watching JetBlue with cautious interest, perhaps seeing it as a potential turnaround story if the airline can tighten operations and weather this economic downturn. However, the bigger picture remains difficult. Just a few months ago, in January 2025, JBLU shares were trading at $7.69, a far cry from where they are now. That's a drop of over 40%, a steep decline that underlines how fast market sentiment can turn, especially in an industry so heavily tied to consumer confidence and economic cycles. In summary, JetBlue's stock growth status is currently stalled, caught in the crosswinds of external economic pressure and internal restructuring. While its Q1 loss wasn't as severe as expected, the removal of guidance, coupled with ongoing demand weakness, has left investors wondering whether the airline can stabilize and return to growth in the months ahead. JetBlue may be facing a bumpy ride right now, but how it navigates the next few quarters through smart cost control, strategic fleet management, and potentially improved consumer travel trends will ultimately determine whether this once high-flying stock can climb again.